I went around for the last several months buying everything I could find in pre-65 silver. We have a network of a lot of small and mid-sized coin shops around the country that will sell to us because they don't hedge their position, and we'll take it when someone comes in. But here's what's happened. So you have a network of traders around the country, or dealers, thousands of small dealers, coin shops, pawn shops, all that stuff. And they will take in pre-65 silver. And let's just say for a period of time, there was more selling in the public than buying. And I've talked a lot about how premiums were low, making it advantageous for people who were able to take advantage of these low premiums. And this has been going on for a while now. So the dealers who aren't sophisticated like the bigger companies, and I say that from a standpoint of business operations, not their intellect, but being able to hedge. So if I have 3 million ounces of silver in my warehouse, like I will quite often, I'll hedge it. I'll sell short 3 million on paper. So if silver, I have 3 million ounces and it drops by $10, I'm down $30 million. I'm screwed. But it goes up on exactly the same amount on what I sold short on COMEX. It allows me to be market neutral. That is what COMEX was designed for. Okay, so imagine you have all of these dealers who don't hedge and they don't have anyone buying it. So what do? Every week they will go to their local refiner and sell it to the refiner, who will melt it down into bars. And the refiners have been loaded up on bars and on candlesticks and on jewelry and on all sorts of stuff, plus demand to make bars and rounds, right? So even the decent size refiners, the big ones, they're getting loaded up on metal to make bars and rounds, even if they're taking in 1,000-ounce bars to do it, right? So let's say they have 50 million bucks in their warehouse. Now, when I use COMEX, I'm selling through my inventory, bang, 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 and replenishing. So I'm constantly getting money to cover my positions and to do all the things that you need to do to make this work. A refiner, on the other hand, takes all this stuff in, has to melt it down, pull out the impurities, turn it into what's called shot, or little BBs, ball bearing size things that they can then melt down and turn into bars and rounds. Now, this whole process, especially when they're continually getting stuff in, could take weeks, 4, 5, 6 weeks of various stages of production. And they're hedged. They have to hedge that silver that they took in, they paid for from the public. So they got millions and millions and millions of silver inside the various stages of production that they hedged. But what's happening? Silver has been moving up so fast, and they're not pulling this stuff out or making the refined product fast enough. They're getting margin called. And they're like, oh my gosh, silver's going up. Our short position's getting margin called, just like these traders are. Pony up the money or your position gets liquidated. So they stopped taking new silver orders or refining orders weeks ago. And so this silver, months ago, this silver just sat there, where now the big houses are saying, fine, I'll pay you, $1.50, $2 back a spot in order to take it off your hands. And that's how it went. I went everywhere and bought all I could. And now you're starting to see it reverse again, because the demand always will catch up with these imbalances in supply. That's where we are now. So the premiums are coming back up. How long it stays here for, I don't know. But remember, during the pandemic, for 4 years, I would have paid you between $8 and $11 over spot for as much of this stuff as you would sell me. Just like markets move too far to one side and they swing back too far to the other side, we got to kind of find that equilibrium in a market like this. Who knows when or where that will be.
That's super fascinating to understand how the industry works like that. So, Andy, you were saying previously that you'd rarely, if never, seen the pendulum swing that far to the cheap side for junk silver, correct?
Yeah, and I never saw it swing that far to the expensive side for junk silver during the pandemic for 4 years. So yes, to be able to buy something below spot is ridiculous. Very, very early on in my career, I can remember in the 90s when silver was $4. Yeah, I might buy it at 10 cents back a spot, something like that, and sell it for 30 cents over spot or whatever the number was, but never to be able to buy it in dollars behind spot. Never. And to me, that was just silly to not. I mean, I literally told my operations, I don't care if you have to go on our line of credit, buy every single ounce you can find anywhere. Buy it all. Go to all the big houses, all the big primary distributors, buy everything, buy it all. There's no downside. We can melt it down if we have to. We have that capability in our warehouse. We have a smelter. We can melt it down and
that's cool.
Send it to the Royal Canadian Mint for pool credit. Whatever we want to do, we can do with that, but there's no downside. And I think that's what you're seeing right now as the reason the premiums rise. It's what it costs to get it after you sell it. So if we sell out of this, how much does it cost me to find it and get it now? It cost me over $1 plus more than it did for the last 3 months on premium. And I think that will continue to move forward as these kind of values don't come by, but once every so very, very frequently.
Okay. Well, kudos for having the foresight to do that. Again, thank you for making the great deal you were getting available to this audience with letting them buy it for $1.
They'll say $1.35 over for now until that changes.
Okay. So folks, if you want to take advantage of that, same URL as before, thoughtfulmoney.com/buy gold. There's a super short form there. You fill it out. It goes to Andy and his team, and they'll be in touch with you right away. Obviously, if you want to, if you've got other questions about precious metals or other buying needs or questions, they're happy to help you with that as well. And Andy, I'm just curious, given the current market dynamics, that $1.35 over spot that you're offering, that's still, in your opinion, pretty good relative to
ridiculously good compared to everything else. Everything. Okay. You look at silver bars, most companies are out of stock of them. Why? Because of tariffs. No one imported them. The majority of them come from Switzerland, Valcambi, PAMP, from metallurgia, something, I forgot the name of it. Doesn't matter. There are 4 or 5 very large refiners in Switzerland, PAMP, Valcambi, Argo Harris, there are a few others. And then, of course, the Royal Canadian Mint. And for quite some time, no one imported them because the threat of tariffs. And so bars, which are normally really cheap, aren't really cheap anymore and are hard to come by and are largely out of stock. And so, yes, when you look at the difference between junk silver and the next cheapest thing, which might be a silver round, it's still an amazing deal. It's by far the best value in the industry right now. Okay.
All right. Couple questions. One, for junk silver, as prices get higher, silver kind of comes out of the woodwork. The grandma's silverware, the tea set, the candlesticks, but also junk silver, right? And it gets sent to the refiners. Now, there's technically a finite amount of junk silver in the world. Over time, years, maybe decades, should you expect kind of the premiums on junk silver to go up simply because it's becoming a scarcer and scarcer thing to find?
Yeah, I would think so. And because it can't be reproduced. I mean, you're talking, it's a minimum of 59 years old. And is that right? 60 plus years old. Yeah, I mean, minimum. And so, yeah, you're talking something that has scarcity built into it just because it can't be reproduced. Some of it gets melted down. Yes, I would think so. I mean, look, when you talk about the amount of investable silver, there's a very small amount of it available. And people in this industry think very much like, well, it's I can still buy it. The online, it's plentiful. That's BS. It's not. There's so much money out there that is wrapped up in traditional forms of investment. If 1% of it leaves those traditional forms and comes into this industry, overnight it will overwhelm the industry. There will be nothing left. Nothing. And I do believe that. And what's really different now is you're beginning to see silver and gold take a different view globally as something that is probably worth more than the dollars and the currencies that are used to purchase them. It is a race. This isn't about 2 or 3 brothers trying to corner the market in 1980. This is the realization, I think, that by sovereign nations that gold and silver are vital in every way to a thriving economy. Gold will be tied to the monetary system because the system has lost all trust. It will marry, I believe, to blockchain technology. And silver, the reason, I think when you think about silver, think of it this way. Why? This is the only question. Why have 8 banks in the West? 5 in the United States, 2 or 3 in Europe, and maybe 1 in Canada. Why have they controlled the largest concentrated short position of any of the 1,000 commodities traded on COMEX ever in the history of the COMEX? Why have these banks done this? Why? It's a tiny little market. The question isn't that they did it, it's why have they done it in silver? Unlike any other market traded in commodities, the largest concentrated short position in any commodity ever traded in the history of the COMEX has been in silver. The Western banks have had a vested interest in stepping on the price. It has never been allowed to find real price discovery. The nations in the global South understand this. That's why they have, the name of my podcast, Little by Little. They're smart. Everyone's, why don't they just buy it all? Because you cut off your nose immediately to spite your face and the whole thing blows up. But if you do it quietly, don't. Little by little by little by little, stand for delivery all over the world. Don't tell anyone about it. You're China. You go to Latin America and buy all the Doré and the concentrate. Don't tell anybody. You continue to do this and doing it in the Globex market, which gives you access to the COMEX through sovereign wealth funds, through proxy banks. So it's not the PBOC doing it. If the People's Liberation Army accumulates it through a fund, that's not reported. All of these things are being done covertly and quietly, and it's finally starting to come to the surface. And you get the U.S. say, well, it's a strategic mineral. And China's saying, that's right, and we're not going to export any anymore through massive restrictions. Some will come out, but not much. What we are seeing I believe, is a transformation back to, they say history doesn't repeat, but it sure rhymes. Gold and silver have been money and part of the monetary ecosystem for 6,000 years. It's coming back into play. And I think that when you look at silver from that perspective, the price doesn't matter today, but the big money that's involved in it, they're going to do everything they can to make you think, why am I holding this? It's too scary. It's over. The top is in. The mainstream media will do that. They've done it the whole way, and they've never been right. And all of a sudden, what do you know? Here it is at $70. Yes, it's going to be volatile. But in the end, I think it is nowhere near its final chapter is where this ultimately goes.